You mentioned price action, and I feel like a lot of people want to look at price action, but either they don't know how, or they look at it like too narrowed or too broad. So how would you look at it, price action, in your case?
Well, price action is the truest leading indicator on a chart, right? So yeah, a lot of people here watching this would be using a MACD or a stochastic or an RSI. I mean, that just follows price, right? And there's a reflection of price. And the purest of all naked chartists, effectively, people who just hone in on price action, will say, look, you don't need all these indicators. You don't need an Ichimoku cloud. I mean, the chart will tell, the price action of the chart setup will tell you everything that you can see. You can see that it's had a big run. Yeah, I could tell you where the RSI is going to be straight off the bat. Obviously, these things are great for confirmations, and when things start rolling over, you get an increased probability that that the moves happened. But the price action is we'd probably start with using and getting an understanding of candlestick analysis, and what it is obviously it's a roadmap of supply and demand in the market at any one time. It aggregates everything that's going on, all the buy orders, all the sell orders, and it tells you a message. It tells you a message about who's in control of price at any one time. If you're looking for trends, if you're looking for breakouts, it's not just about how a journey goes from A to B. It's the quality of the journey, and price action will give you an understanding of that journey that you're seeing there as well. So, yeah, I mean, if you're getting into trading, the first thing I would suggest is getting an understanding about price action analysis, maybe technical analysis, but what is the market actually telling you? And that will be part of your ongoing process that you need to do. Obviously, identifying trades is one thing, and a lot of people say that's probably the easy part. The tougher part, of course, is what you're doing when you're in a trade, how you can extract the most juice out of each trade, how you can cut out of that trade before at the right time without it getting too much of a problem, how much risk you're taking on, correct position sizing and those bits. So candlestick is great for identifying opportunity and understanding the message the market's telling you. But it can also be a fantastic opportunity to tell you when the market's saying get out of the trade as well. So it's not just about getting in, it's also about getting out, and that can be the hardest point. Everyone's so focused when they start of getting into a position and making money, but ultimately as part of that risk management, the market gives you a pretty clear message that you're wrong. Accept it, have the ego to accept it, and get the hell out of the position as well. And that's the position that it takes a long time to change that. So when I'm looking at it, part of the mindset that I would go into a trade is the idea of trying to add to a position. So start off small. If the market's saying your analysis is working, and I will use a fundamental backdrop to assess what I think is happening with the world. And that can take a long time to develop, and takes a lot of time to study as well, which is kind of like, it's difficult if you're a plumber and you've got, you're working off site, or you're a farmer and you're in a field, you don't have time to necessarily do that. But I'll have an understanding about what is a market is really sensitive to. Is it economic data for trends? Is it political trends? What sort of economic data is going to change that macro theme? Is it the low growth environment? Is it too much tightening of policy? Which is it? Low employment? What is it going to be? And then get the technical setup and price action around that as well. But I think if you can go into a trade and say, well, let's start off with a small enough position relative to the account size, and if the market's saying that your analysis is working, perhaps you could look to build onto that trade. Obviously, that changes the mindset around from one of, I've got to take my profits, I'm making money, let's get out of the trade, to one of, actually, this is working. Let's see if we can build on that trade. If something's working in your life, you tend to do more of it. If it's not working, you tend to do less of it, right? And that's a thing that you don't see enough of in trading. People will reward things that don't work, which is kind of crazy, right? But it's to do the opposite of that is one of the hardest things you'll ever do in trading.
Yeah, and I think that makes a lot of sense. But for most people, it's going to be hard to implement. Maybe at the beginning, like when they don't know what's going to work and when to ask to trade, then they can kind of fall.
Well, I mean, the thing is, every single educator that you have out there will say, "Oh, you've got to let your profits run. You've got to cut your losses early, right?" And if it was that easy, and we'd all be, every single retail trader would be making an absolute mozza. But it's one of the hardest things to do. Yeah. The ability to to surrender a profit to be proven right, and suddenly you've gone from what was a winning trade, and you're like, oh, it's coming off, I better close it just to be a profitable trade, when in fact the actual, you might work off daily charts, the candle hasn't changed, or 4-hour charts, the candle hasn't given you that exit signal, and you're just like, oh, I'm watching my P&L, and the P&L tells you start panicking, and of course emotion takes over and makes us start doing crazy things, which is not part of the process. So yeah, I think if you can go in there going, I'm doing well, instead of actually just crystallizing that profit, maybe I can look to add to the trade, and it changes your mindset. But again, that's incredibly hard to do. So that's the thing that every new trader and most intermediate traders and actually a lot of professional traders will find hard is that cliche that you hear time and time again, that you've got to let your profits run and you've got to cut your losers. I think cutting your losers is quite easy to do once you've actually become disciplined. Letting your profits run, I think, is quite a hard one. So you get all these people coming out and saying, oh, your winners take care of themselves. Well, I think that's actually not true. I think being able to extract more out of your trade is actually so difficult to do. Cutting out the losses for me is like, I'm just not doing what I want to do. I'll just get out the trade and move on to something else. But everyone says, oh, your winners take care of themselves. I think that's actually very, very difficult to do, is to continue to let your profits run, because the psychology of your brain is telling you you've got to be successful, you've got to be a winner, Oh, it's coming down, I'm losing money, and then you look back over a couple of hours later and the trade's back up in the profit again. I should just get hold of it. The psychology of trading is incredible. I mean, there's a lot of people out there who sort of focus on that side of things very well. But for me, it's part of a process, and again, how you go about doing that's up to you and your own strategy.
And I think you mentioned a big takeaway here, which is the fact that you should get out of the trade based on the candlesticks, not the P&L. Most people do the opposite. They look at the P&L and then get out. But I think that's a really good takeaway people can apply. So looking at the market to determine whether to get in or get out of the trade.
Yeah, I mean, but you see it all the time. I mean, even pro traders will do it. They trade their P&L, they don't trade the market. And that's one of the hardest points is, I mean, you take a step back and you say to a client, what is your exit strategy? You've been in this loss now for a while. Are you going to continue to let it run? I'm going to take profits. I'm going to take profits when it's break even, or close the trade when it's break even. And I'm like, well, what's the significance of the break even level? I mean, what does that mean? And then what happens if you were to make a profit? You move your stop to break even. But you're just trading your P&L. You're not doing anything with the market. You're just focusing on that P&L line. Is there any reason to move the trade higher, or the stop loss higher? Has the market moved significantly enough, or just psychologically because you want to move it to break even? I mean, what's the significance of break even? It's just that psychological thing that you can't make a loss, and that's what the people are so scared of. So you're trading the market, you're trading price, and you're not trading your P&L.